Day trading stocks is simple, but it is not easy. Stick with me in this video and I'll teach you some of the things that are important to know before you get started. Plus, I'll do my regular weekly market analysis. We'll look at the day trade of the week on MKD, and we're going to run a market scan in search of longer term trading opportunities. All right, so there's millions of new stock traders in the market. It's the offset of COVID. People are at home, many of them looking for a new career, and they've chosen to trade the market, whether it's day trading, swing trading. Doesn't really matter. What's important is that many of these new traders don't have a whole lot of experience, and they don't really appreciate what it takes to be successful. So I want to share with you some of the reality, the things that I've learned from trading for 30 years and from teaching others for over 20 years. One of the main things that I think people need to realize is that there is no barrier to entry, really, to trading. You open a brokerage account, you can be a stock trader. Now, if you want to be a lawyer, you have to go to school for 7 years. If you want to be a doctor, you have to go to school for 10 years. You want to be a professional athlete, you have to start when you're a young person and train for your whole childhood life until maybe you can make the big leagues. But in trading, have some cash, open an account, and you can call yourself a trader. And it's simple. Trading is simple, but it is not easy. I think anyone can learn a trading strategy. They're not that complicated. The strategies that I teach, I can teach you in an hour. However, following the strategy, gathering the experience to really be good at it, well, that takes time, like anything else. It takes time to be a pro hockey player. It takes time to be a pro trader. I would say it doesn't take as long to be a pro trader, but you do have to gather experience. And here's the thing that is most difficult, and that is gaining mastery over yourself. You can learn the basic mechanics of day trading, how to get orders filled, how to read stock charts, how to read level 2 screens, all of those sorts of things. You can learn that in a few months. And then practice and get good at it. You can certainly get there relatively quickly. But your ability to follow rules is a matter of overcoming your emotional attachment to money. And that takes most people quite a bit of time. You have to overcome your fear of missing out, your fear of losing, the greed and chasing things higher. You have to learn to recognize when your brain goes into fight or flight mode instead of thinking mode. When you go into fight or flight mode, you do not make good trading decisions. And I see it all the time in the market, people trading out of fear or greed instead of rational thought. So my advice to you, if you wish to be a good day trader, is to take it slow, to learn good basic knowledge, to practice reading charts and learning how to analyze stocks, to take the time to learn a proven strategy, understand the importance of data and how it influences good trading decisions, practice, learn to overcome emotion, write down a trading plan, get someone to support you through the process. There are so many things that are necessary to be successful. Don't fool yourself. You may get lucky in the short term, make a few trades, think you really know what you're doing. I've seen it many, many times. But to be in that business of trading in the long term requires that you really know what you're doing, and that just simply takes time. All right, let's get into this week's market analysis, starting us off with the U.S. markets, as we always do. This is the S&P 500. 30-day, 60-minute chart, and you can see here that the chart is going up from left to right. That means the buyers are in control. We had a little bit of weakness on Friday, but it has not broken the upward trend line, and it probably sets us up for maybe a few days of sideways trading. Not a big concern yet, but anytime we get some weakness, we should be a little bit concerned. However, until this upward trend line is broken, I'm going to stay on the bullish side in the short term. Now, the long-term chart looks even better. We've got a nice steady upward trend. We had that little pause through the early fall, and then now we've continued higher in the upward trend, so remain bullish on the S&P 500, the large cap US stocks. You can also look at the tech market, and here I'm showing the daily chart of the NASDAQ 100, and you can see that this week it broke out to new highs after going sideways for about a month, and that is a sign that the buyers are still in control, and in many cases we're seeing some irrational pricing in some stocks, but until they give sell signals, you just got to plug your nose and stick with it. Just realize that eventually some of these bubbles will burst. The the Russell 2000, which is our small cap index, has really been the place to be the last few months. You can see the market being in a strong upward trend, and it is still that way. We had a little bit of weakness to start the day on Friday, and really last week kind of a sideways week. But sideways weeks are important because they give a base for the market to move off of to the upside the next round. You can see here we had a sideways range, and then we continued higher, and a sideways range, and then we continued higher. So it's healthy to have these sideways ranges. What we want to watch for is a break of the upward trend line. If that upward trend line gets broken, particularly after the build of a falling top, then we'll get a little bit more defensive. But for now, the small caps are doing well. Onto the Canadian markets, and here is the TSX 60 short term. You can see a little bit of a difference here between the Canadian US markets. The Canadian market breaking down through some support, building some falling tops. So I think it's worth being a little bit more cautious on the Canadian market. Now, if you've been watching my video every week, you will know that I predicted that the Canadian market would stall for a little while simply because it had rallied into resistance. These old highs are resistance, and it's a very basic rule. When markets rally into resistance, they usually get stuck at resistance, and that's what we've seen the last 2 weeks. It's not a real negative yet, but still I would say be a little bit more cautious with the Canadian market. Looking at the Canadian junior market, it's doing quite well. We've got a nice upward trend. Buyers are in control. There's good action in some of these penny stocks on the Canadian market. Liquidity isn't always that great, but if you can swing trade or position trade these things, then it's not too bad. On to commodities. Here is the chart of gold, and gold is really having a bit of a stall the last few weeks. It tried to break that downward trend line and failed. It's been stable since, but it's not particularly optimistic. And so the long-term upward trend in gold is hanging on, but the short term is pretty muddy and somewhat bearish. Oil market is still in an upward trend and continuing to slowly grind its way higher. Now let's talk about fear. I always like to take a look at the VXX, which is the fear chart. It is based on the implied volatility of the futures market of the S&P 500 short-term futures. And you can see that generally fear has been falling. This is a little bit tainted chart because there is time value decay in how this is priced, but nonetheless, fear is low. Perhaps we could say that the market is complacent, which isn't really a great thing, but there's no reason to panic at this point, even though the market is perhaps a little bit overbought, a little bit overextended. There's no sell signal, and so we stick with it until there is. So my ratings then, bullish on both time frames for US stocks, neutral on both time frames for Canadian. Gold, neutral long-term and bearish short-term. I'm a little worried whether gold might soon break that long-term upward trend. It is certainly flirting with it now. Oil, neutral long-term and bullish short-term. You've got all these retail traders that have come into the market, millions of new ones, and they don't necessarily know what they're doing, but they're happy to chase stocks higher with emotion and often irrational action. Now we can enjoy that upward trend, but recognize that eventually all upward trends end, and so we must watch for exit signals. I'm not saying sell stocks today. There's no reason to. Just watch for the exit signals. Gold is relatively quiet, but somewhat bearish, and oil continues its slow recovery. And as I said, fear is low. All right, let's talk a little bit about the day trade of the week. And this week I'm going to show you the screen that participants of Active Live see during the day. This is one of the screens that they see. And this is where we see the actual indicators and the time that they trigger my all-important action candle, which is the foundation of my day trader strategy. So for example, MKD, the symbol MKD, triggered at 9:48. Now the reason it's in blue is because it's an optimized trigger. It means it's the higher quality of my entry signals. Now in this particular case at 9:48, the algorithm, the strategy that we run in Active Live said for every $100 of risk, buy 4,990 shares. That meant capital requirement of $4,641. Now at the end of the day, the stock closed at a reward for risk of 29, and during the day it hit a 38 times risk multiple. Its drawdown went down half an RR, or half a reward for risk element. Now it makes a little more sense when we look at the chart, so let's do that now. Here is the chart of MKD, and that 9:48 candle is that one right there. You can see the little pink dot on it. That is the action candle. So again, the economics, for every $100 of risk, we buy 4,990 shares. Now this was the best performing stock that my strategy found on Friday. It required $4,641 in capital. It is not marginable because the stock is under $3, so you have to put up all that capital, $4,641, for every $100 of risk. Now at the end of the day, we're at 29 RR. You can see that we hit 38 RR about an hour and a bit before the close. Well, that was a $2,900 gain, a 62% return for the day on this day trade. It was found with an algorithm, with a strategy that I've spent many years developing. And then it's a matter of having the emotional control to carry out the strategy, stick with the trade until there's an exit signal. All right, let's go now into the market scan tool on Stockscores. We're going to run a market scan in search of longer term trading opportunities. Not everyone wants to be a day trader, so let's run. We're going to run the abnormal breaks US scan. I'm going to limit my scan tonight to stocks under $15, just because the small cap market is the better place to be right now. Now we have 47 stocks that are found by the tool, and our job is to go through the charts looking for stocks breaking from predictive chart patterns. Now the first few that you saw there were under a penny. I personally don't like trading those, so I'm going to move on. Here's a stock that I bought on Friday. It is one that broke its downward trend line earlier in January, right there. Had strong volume, so that was the first buy signal from sort of a double bottom, pretty decent setup. And then on Friday, it triggered a day trade entry, but also another second entry on the longer term chart, the daily chart, which is what we see here. Now I'm a little bit concerned about the resistance there, and so I'm treating this as a swing trade. I bought it early in the day on Friday at a much lower price. I'm not crazy about entry of this stock now because of its resistance that it's going to encounter. I would give this a 6 out of 10. If you bought it earlier in the day on Friday, perhaps you were in Active Live and you bought it with me, then it's okay because you bought it closer to the closer to the support price, which means the reward for risk trade-off makes a little more sense. All right, let's keep on moving here. Let's see if we can find any other good pattern setups. What I'm looking for as I go through these charts is a predictive chart pattern. All of these stocks are making abnormal price moves with abnormal volume, and that's essentially my action candle indicator, and that's something that I know is quite predictive. But just by having the action candle doesn't make these stocks a buy. We still need to inspect their daily chart, their 3-year weekly chart, to see if they have the right kind of chart pattern. And so when I see a daily chart that I think has potential, I then look at the 3-year weekly. Now this daily chart had a pretty good potential, But when I jump to the weekly chart, I see that the stock has pretty strong resistance there at $2. It's still below that. And so I think it's a good looking chart, but not a great one. And so I've learned the hard way to be very fussy about what you take. So here's RNWK. This is a nice looking daily chart. It has rising bottoms, which is optimism. It's been going sideways for a number of months underneath resistance at about $1.80 or so. A little bit of a spike in volume on Friday, so it all looks good there. But we always want confirmation on the 3-year weekly chart. And then I do that and I say, okay, still breaking through that resistance, going back quite a distance. That's pretty good. The downward trend line has been broken, so that's pretty good. We built a rising bottom. That's decent. It's a little bit choppy in here. It's not terrible. I would give this a 6.5 out of 10, which means I think it has a 65% chance of working. Now, the process that you see me doing here is something that I do every day, and those subscribers to my tradescores.com alerts will basically get my analysis as I am doing it in this video. I do this every day for them, try to pick some stocks. The results are all displayed on tradescores.com. I think my average return is about 38% with an average hold period of 33 days, 34 days. So it's when you annualize that, it's pretty amazing. And I don't know anything about these companies. I just run market scans in search of my rules, when that simply is abnormal price breaks from predictive chart patterns. And when I see something that I like, I send out an alert to my subscribers, and of course I often buy them myself as well. All right, we'll do one more page here in search of something. Let's take a look at this ORMP. See, it's got resistance there at 6, so that's not ideal. OPTT, good if you own it. We actually, I picked this stock in one of my newsletters back, I don't know, a number of months ago. I can't remember exactly when. Probably early October, but it could have been there in August when it started to behave abnormally. Most stocks that make market-beating trends start those market-beating trends with abnormal price and volume behavior. This Just Energy looks decent. Let's blow this up. You can see the volume coming in on Friday. Price action's pretty good, breaking through some resistance. It's got quite a bit of noise over here, but still I think it could get to $10, which is a fairly substantial gain from where it is. I'd give this a 6.5 out of 10 as well. So there you have it, a couple stocks that are worthy of a 65% rating. I prefer those that are at least 7 out of 10. Those are the ones that I will tend to feature to my TradeScores subscribers and often buy myself, but 6.5s have pretty good potential as well. Well, I hope that you've enjoyed this, and if so, help me out by hitting the like button, subscribe to the channel, and most importantly, as you go into the next trading week, trade well.